Alrighty, well, hey there, everyone. John here, back once again with Crypto Top 10 to bring you some of the trending articles in the crypto news space. And must I say, what a meh news day. Not really anything too crazy to report, but we're going to keep on trucking. So, without further ado, let's hop in. Coinbase taking a hit of 5% of its workforce over a political speech ban that Brian Armstrong, the CEO, announced. He also offered a pretty substantial severance package to any employees who didn't like it and wanted to leave. So 5% of the employees took him up on that offer. While 1 in 20 might not seem like a lot, depending on what positions they were in, and that could spell some operating issues for them in the near term while they work to reconfigure and redo all that. Honestly, of that 5%, 1 or 2% of them were probably looking to leave anyway and just took the sweeter deal, but it remains to be seen. So Coinbase was deciding to remain apolitical. Brian Armstrong said that the team should focus on its mission of financial inclusion, achievable only by growing Coinbase's profit and revenue. That's just so inspiring, like tearing up right now. Just, oh God. I wish every company could be like that. He said that politics may exist in the workplace, but that the firm would not advocate for policies unrelated to crypto. So, announcing that 5% of employees, or 60 of the 1,200 who work for the San Francisco-based exchange, opted for an exit package after he said last week the firm's employees should separate politics from work. In a Coinbase blog post today, the contents of which were emailed to employees earlier today, Armstrong said that he could have done a better job bringing the operating group and managers along on this clarification of our culture, so everyone was prepared for it before it went out to a wider group. That's part of the problem with all this. People felt they were being blindsided with it, especially those who thought that they were, standing for something other than profit and revenue. But whatever. He's quoted as saying, "We don't engage here when issues are unrelated to our core mission, and we believe impact only comes with focus." Jack Dorsey, CEO of Twitter and a noted Bitcoin supporter, took a swing on Armstrong on September the 30th, Twitter-wise, nothing physical, unfortunately, with the rejoinder that crypto is inherently, unavoidably political since it distributes to the masses power usually held by banks and governments. I wholeheartedly agree with him on that. My stance on government is that it should provide services that are difficult and strenuous for an individual person to be able to do themselves. And if we can take banking off of government's hands, hey, we could take banking off your hands. That's just my opinion on things. But hey, according to Armstrong, Coinbase doesn't just stand for profit, but for accomplishing the mission and to keep its employees happy. However, as we also said, the mission can only be accomplished through growing revenue and profit. So, the amount of companies that gussy everything up and talk about how much they care about you as a person and how inclusive they are and this, that, and the other thing, they're all just masking the fact of what Coinbase is saying flat out. We're here to grow revenue and profit. So, okay. Some people do, however, like that window dressing. It makes them feel like they're contributing to society or something like that. So we'll see how this goes for Coinbase long term. And anyways, it's an interesting story. And God, doesn't Brian Armstrong just kind of look like a douche? Anyways, sorry, just my opinion. So let's hop on over and talk about Ripple. So Chris Larsen, Ripple's CEO, spoke at the LA Blockchain Summit about a possible exodus of Ripple from the United States and a Cold War between China and the US on the financial technology of the future, cryptocurrencies. For the XRP community, however, his statements about the XRP token and on-demand liquidity, or ODL, may have been pretty interesting as well. So he expressed his opinion that investors should not expect ODL to influence the price of XRP. According to Ripple's co-founder, the value of XRP is much more strongly correlated with that of Bitcoin and Ethereum rather than Ripple's ODL projects that are currently determining it. So that's interesting. He's just like, yeah, I know we're working on on-demand liquidity, but it doesn't really matter. We're just going to go up when Bitcoin goes up and up when Ethereum goes up. So, whatever. I disagree on that. That might be how it is right now, but if you can demonstrate proof that your ODL systems are as revolutionary as you claim, then you're going to rise on your own. That's just my opinion, though. Larson also explained that Ripple continues to make really great progress and positions itself as an enterprise blockchain solution. The gateway for Ripple are the banks and payment service providers who already have hundreds of millions of customers. I would dare say billions. Basically, they want to be the go-to guy for cross-border payments and all that other fun stuff. Larson was also asked whether Ripple would consider acting as a consultant to central banks, like the big boys, government type stuff, and whether that would open the company to further accusations of being the, quote, overlord of XRP, unquote. Larson didn't see a problem with this and explained that ODL is only a small fraction of the XRP marketplace. The company would like to work with a central bank. I mean, there'd be a huge feather in your cap to be one of the first cryptos to officially work with a central bank, and the types of access you would have and the amount of customers you could onboard would be a lot. That'd be the type of thing that would make the ODL cause XRP to rise separate from that of Bitcoin or Ethereum. Interesting times. But hey, speaking of Bitcoin and rising, Square just bought 50 million Bitcoin. And Bitcoin started to rise. Why it didn't rise when Grayscale Investments bought more Bitcoin for 3 months straight than what was minted for 3 months straight? I don't know. But hey, Square bought 50 million. So they purchased 4,709 Bitcoin to be exact, about 50 million bucks. Square is not the only large company to do something like this. MicroStrategy also made waves for announcing a significant purchase of Bitcoin. These news events could be a signal to investors that a new cycle is starting up and bigger parties are showing significant interest in Bitcoin. However, this will also affect the short term as Bitcoin is still hovering beneath that crucial $11,000 resistance. Bitcoin volatility is showing signs of boredom, as are we all. It's been pretty bleh as of late, as the metric is back to levels seen in July. That was the period after the halving, which caused a lot of sideways action in the price for weeks, months, eternities. However, as bullish news enters the markets, some short-term hype could be established in Bitcoin price action. A breakout of the current triangle would be bullish for Bitcoin, but investors should be cautious. Basically, we're looking to see if we can break through the previous 11,100 to 11,300 support area. If it breaks and becomes support again, further upward momentum is possible and warranted. Such a breakout would also cause altcoins to hopefully show some strength as well, as they've been hammered heavily in the past few weeks, and I mean heavily. The best climate for altcoins is an upward moving Bitcoin, as this gives investors a calm market environment to trade altcoins in. Yeah, so essentially, if Bitcoin can break through the $11,100 range, further bullish movement can be expected towards 12K. This makes the 11,100 to 11,300 area critical for continuation. If this level does not break and the trend line is lost, we're likely to shrink back towards 10,000 and maybe even retest that support zone. Boy, I sure hope we don't. And then an awful lot of work to maintain this quasi-flatline state of boredom. I mean, Bitcoin is undervalued, in my opinion, right now. It should be closer to 15. Honestly, I think in the alternate timeline where coronavirus never happened, we're in the middle of a golden bull run. and Bitcoin's like 40K, and we're all dancing and singing and laughing and happy. But we are in the darkest timeline, so this is what we got to deal with. But, anyways, let's hop on over for a bit more downer news. Alrighty, so the DeFi market cap. Yeah, we're going to talk about this. Kind of stinks. So, the DeFi bubble is continuing to deflate, with crypto market data firm Sentiment reporting a 25% crash in the market capitalization of DeFi assets during yesterday alone. By yesterday, I believe they mean October the 7th, as this was published on the 8th. So Sentiment estimated that the daily DeFi token trade volumes have fallen by 30% combined, while recent market leaders Sushi, Uniswap, and Yearn are amongst the hardest hit, with weekly losses of 51%, 38%, and 31% respectively. So just 3 quick knives to the heart. Et tu, Brute? Despite noting that crypto Twitter has already emphatically declared the death of the entire DeFi experiment, just like Bitcoin's been declared dead like 200 times at this point, Sentiment claims to have identified whale accumulation activity taking place around several DeFi assets, including that of Synthetics. Sentiment also noted the combined value of DeFi assets at the time they last moved on the MVRV blockchain has dropped to an all-time low, indicating undervaluation at current price levels. For those of you who do not know what MVRV is, it's a ratio that was established by a couple smart people with the idea of a realized cap versus market cap. Basically, they try to compare the two, and based on where the levels meet is where they personally think that the price of an asset should or shouldn't be. So they're saying they think it's undervalued. But hey, what do I know? Either way, it stinks that DeFi is down 25%, but like all bubbles that deflate, they reinflate. Better and stronger than ever. Just take a look at Amazon. Made it through the dot-com bubble just fine. The key is you got to figure out which protocol is going to be around when the dust settles. But moving on, the Department of Justice just published cryptocurrency and enforcement framework. Yeah, they're looking at them, but not in a great way. So this was published by the Attorney General's Cyber Digital Task Force, outlining what cryptocurrencies are and their potential use cases. I'm going to be honest with you, they are really basic. I believe this report is designed for senators and House of Representative members and other government officials who have no idea what cryptocurrencies are. So they include sections on both legitimate and illicit use cases. Though legitimate uses section was pretty short and fairly skeptical, crypto has been used to support terrorism, purchase illicit items, conduct blackmail and extortion, cryptojacking, launder funds, according to the document. You know what else has done pretty much all those things? Cash. Oh, also wire transfers. So, the DOJ has spent the last 2 years determining how to best address all these issues. Personally, to me, it sounds like more like, okay, now we have another thing we have to keep an eye on for all these illicit and illegal things. It's not crypto. I get so upset about this, but it's just crypto itself is not inherently good or evil. It's the person who uses it. Just like how cash is not inherently good or evil, it's the person who uses it. And a gun's not inherently good or evil, it's the person who uses it. But we're going off into the weeds here. So, in a statement, Attorney General William Barr said cryptocurrency is a technology that could fundamentally transform, how human beings interact and how we organize society. Ensuring that the use of this technology is safe and does not imperil our public safety or national security is vitally important to America and its allies. So the report warns that cryptocurrencies are more difficult for investigators to learn about than previous tools for executing crimes, citing pump and dump schemes as one example. That is actually a fairly good example. It's much, much harder to identify insider trading because it's not one stock exchange, it's hundreds of different crypto exchanges, some with higher and lower volumes that can be used in those types of schemes. So much of the first section of the report simply provides a very basic overview of cryptocurrencies, i.e. for the dum-dums, blockchain and distributed ledgers, more broadly and how they've been used over the past few years. The report distinguishes between virtual currencies, which are a digital representation of value, and cryptocurrencies, which it describes as being a subset of virtual currencies that are decentralized and based on blockchains. Not bad. It summarizes as well the United States government's actions over the past few years and a few examples of criminal cases brought by the DOJ, the SEC, the CFTC, including the SEC's case against Telegram and all that fun stuff. And look, this is a really long article. I'm not going to go through too much crazy stuff. This is just so that way you're aware the United States of America is developing an enforcement framework that the Department of Justice will use to give guidance on how individual jurisdictions and different agencies should conduct themselves when investigating crypto-related crimes. I would like to see a bit more language about the nice stuff that crypto can do, but that's probably not what the people who were tasked in making this report were told to do, nor is that really the Department of Justice's area of expertise. So, while this is a guideline framework, it would be nice to get some more concrete laws and regulations so we don't have things like ripples threatening to move overseas because they don't know what's going on. All right, and to kind of round things down for the day, BitMEX, we'll touch back in on it. The outlook for it is appearing to deteriorate. For those of you who don't know, a lot of people got arrested and a lot of charges got brought. In an apparent attempt to mitigate the situation, BitMEX has announced changes in the board of directors of its parent company, 100X Group. According to a press release, Arthur Hayes and Samuel Reed have left management positions at 100X Group. In the press release, it stated that the decision has been supported by Hayes, Reed, and Ben Dolo, the founders of BitMEX, also the three people who are charged with doing a bunch of illegal and shady things, with immediate effect. Hayes will step down as CEO, and Reed will step down as CTO, and the other defendants will step down as executive managers, basically clearing the way for new blood untainted by scandal. Hayes has been replaced as CEO by Vivian Ku, who has been part of the exchange in March of last year, when she left her position at Goldman Sachs as managing director for the Asia Pacific Compliance. Previously, Ku was also part of the Hong Kong Securities and Futures Commission and will serve as interim CEO. And then the article goes on to talk about what we already know. Between 45,000 and 50,000 Bitcoin has been withdrawn from BitMEX in the past 24 hours since the scandal broke and seems to be finding its home amongst any other active exchanges. So that money is not just disappearing, it's just flowing out of BitMEX into Binance, KuCoin, well, maybe not KuCoin, not right now. They're dealing with their own hack, but other exchanges. KuCoin is just the only thing I can think of because we've been talking about it all week. But yeah, it's one of those things. BitMEX is going to be doing a lot of introspection, and I don't know if they're going to make it out of this okay. Stinks for Vivian, who seems to have left a pretty cushy position over at Goldman Sachs to be thrown into the fire. But hey, she can put CEO on her resume now, so there's that for you. But all right, that will do it for the trending articles in the crypto news space for today. My name is John with Crypto Top 10. As always, thanks to all those who have subscribed. I really, really do appreciate it. And if you've made it to this point and you haven't subscribed, well, just hit that little button right over there. Yeah, that one. That one right there. Hit that little button. That way you can hear the sultry tones in my voice and me phlegmy cough from time to time. I do apologize about those. I promise I don't have the COVID. It's just the temperature cannot make up its mind, and my sinuses go insane when the temperature changes. We've alternated between 47 and 77 degrees Fahrenheit, where I am right now, and it's just destroying my sinuses. But anyways, taking a look at the top 10 coins by market cap, biggest winner of the day is looking like Chainlink, up 6%. Good for them. Almost back to where they were a week ago. How about that? Still, I'm glad to see them rising. We were worried they were going to be slipping down to the $7 mark, and it looks like they're sitting at $9.52, so not too bad. Biggest winner in the top 100. Oh, the Midas Touch Gold up 26%. Good for them. Sushi Swaps up 19. Uniswap's up 16, so regaining a little bit of ground over everything that had been lost. Biggest loser, that's pretty good day. PumaPay is only down about 6.5%. Elrond's down about 3%. Nothing too crazy. Most coins in the top 100 are in the green in some way, shape, or form, probably due to the general bullishness of Bitcoin. But without further ado, I'll let you get back to whatever you were doing, and peace.